This video is all you need to start scalping for a living. Forget everything you have been taught about scalping and focus on this complete course, because what you are about to learn will change your life forever, and you will remember this day. Scalping is an unsolved mystery among many traders. Watch me uncover these mysteries as I give you the best strategy to trade and a lot of other pro scalping informations before the end of this video. Now, tribe soldiers, let's get down into this business. In case you don't know what scalping means, I will explain. Scalping is the act of analyzing and trading the market based on signals generated on smaller time frames for quicker profits in a very short time. The major thing that differentiates a scalper from a day trader or swing traders is the time frame that is traded and their level of patience. Swing traders are very patient type of traders. The day traders are also patient traders, and the scalpers are in for quick profits in a small duration of time. But these scalpers are making a lot of money in the market within minutes or even seconds. In fact, many scalpers are making more money daily than a lot of day traders. But why is that so? Number one, because scalping is less risky than day trading. Scalpers trade with less risk in the market. They get very minor loss because their stop loss is usually small compared to that of day traders and the swing traders. And their take profit targets are more realistic as they are in for small price movements. They are not greedy. Number two, scalping takes less of your time, so you can combine trading with other day-to-day activities like your job, taking care of your kids, and spending time with your partner. And those other things you do daily. All you need is some minutes of your time and a good and easy scalping strategy, like the one I will be showing you soon. Though being a scalper also have its downside, and many things that you must avoid. If you want to thrive in this game, I will teach you on how to stay off those bad behaviors that stops many scalpers from becoming profitable. But before that, let's move straight into our scalping strategy. In this scalping strategy, we will be making use of 3 exponential moving averages, the 25 exponential moving average, the 50 exponential moving average, and the 100 exponential moving average. And for this, we are going to be using the 5-minute time frame. Although this can also work on the 1-minute time frame. Now, this is how the strategy works. We will be following 3 steps. The first step is that we want to find an existing trend in the market to know where the market is actually heading to. Since the trend is our friend, let's work with him. And the way we do that is by looking at the exponential moving average line closely. All 3 lines needs to be heading in the same direction and also separated from each other as they move, just like this one. The code is that we don't want ranging markets just like this one. And you can know you are in a ranging market when you identify that the exponential moving average lines are heading sideways. You also want to avoid markets where the lines are crossing each other like this. Remember, we want the 3 indicators to be moving in the same direction. We want them flowing in a strong trend. The position of the candles are also very important. You want to find a setup where the candles are fully outside of the 25 exponential moving average like this one. So once you have identified the setup, next step is finding our entry signal. Our entry signal will be when the price makes a pullback and closes below the 25 or 50 exponential moving average line. Let me show you what I mean. So in this chart we have spotted an existing uptrend as shown by the 3 exponential moving average lines. All of them are heading upwards while the candles are above them. Next you wait for the price to make a pullback towards the 25 or 50 exponential moving average line. This will act as our trade setup. The third step is to wait for the price to go back to the 25 exponential moving average line again. Once this happens, you take a buy position here. However, if the price instead went down and broke below the exponential moving average line, you cancel your whole setup and look for another trade opportunity, because this may indicate that the trend is already changing. Now, for the exit strategy, let's say you took a buy position here. you want to set your stop loss at the 50 exponential moving average line. And for your take profit target, you set it at least 2 times as large as your stop loss. So here's an example of this strategy in action. In this chart, we can see that the market is currently in an uptrend, as shown by all the 3 exponential moving average that are currently heading upwards. While all the candles are moving above the exponential moving average lines, next we are waiting for a pullback towards the 25 or the 50 exponential moving average. But remember, the candles must not cross below the 100 exponential moving average line. So once the pullback happens, the next step is to wait for the price to reverse back up to the 25 exponential moving average line. And once this happens, you take a buy position, and next, we set up our take profit target and our stop loss, keeping to our good risk management plan. And as you can see, the take profit target was hitted successfully, so this counts as a successful trade. Now let's look at another example in this chart. So here we identified an existing downtrend, as shown by all 3 exponential moving average lines heading downwards, while all the candles are moving below the exponential moving average lines. Next we are waiting for a pullback towards the 25 or 50 exponential moving average line. And remember, the pullback must not overlap the 100 exponential moving average. So once the pullback happens, we wait for the price to go back to the 25 exponential moving average line again, and when it does, you take a sell position. Then we set our stop loss above the 50 exponential moving average line, and our take profit target at least 2 times the size of our stop loss. And here, as you can see, our take profit target got hit successfully, and this would have been a successful trade if you took it. Now you must have noticed something about this strategy. Notice that all the exponential moving average lines serve different purposes in the market. The 25 and the 50 exponential moving average lines act as our setup, and the area where the price can pull back to before moving above the 25 exponential moving average line. The 100 exponential moving average line acts as our red zone, where price must never move to, and if price does, it instantly cancels the whole setup, and we avoid taking the trade to avoid losses. The 3 exponential moving average lines in general shows us the current trend of the market, as long as they have spaces in between each other, and price is moving above them or below them, according to the current trend of the market. The most important of them all is the 25 exponential moving average line, as that will give us the signal to finally enter the market. This strategy is a complete package for every trader who wants to fully enter into the scalping group of traders, or just want to scalp sometimes when you are bored. In it, it has everything you need, including the tools, the setup, the entry level and the exit level. And you are going to start seeing the kind of results you will be making on your real account. After backtesting this strategy multiple times on your demo account, this strategy works wonders. But here is something I must tell you before you go deeper into this scalping game. 1. You must still be patient while scalping. Though scalping can be a very fast trading game, patience must still be involved in scalping. Because your father does not own the market, and you have many competitors coming after this and bag you are pursuing. And patience in this aspect is not much of a big deal. It is by waiting for the market to do exactly what you want from it, and remaining finger crossed and calm, and never being triggered by the other things that the market is doing. If you can stay focused only on what you want from the market, you will be bigger than the trader you were, even before you watched this video, my tribe soldiers. Now, the second thing you must do is to maintain a consistent risk management plan. I see many traders make this mistake a lot. They enter the market with a small leverage, make some profits, and then enter a new trade with a much bigger leverage that they used on the winning trade. Now, the new trade might end up in a loss, and just like that, they have wiped off the profits they got on a winning trade. And after that, they enter a new trade with a bigger leverage, even more than the one they used in the other losing trade, in hopes that they will recover their money on that trade. But hope does not work in trading. The market is operated by realistic goals that is set by experience. You must maintain a certain leverage consistently for a period of time before increasing your leverage. In this way, you will maintain a balance between your winning trades and your losing trades, winning more and staying away from heartbreaking losses. And if you loved this video and the easy strategy I gave you all, then you are going to love this simple stochastic trading strategy that you can use for scalping and even day trading. If you want to become my student and learn from me personally, I will leave my contact in the description box below. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.